You are 33 years old when a mortgage officer tells you that your income is strong but your life is too expensive to approve. You earn $96,000 a year, drive a $71,000 car, and have $187 in checking. The mortgage officer explains that your car lease, credit cards, personal loan, and rent consume almost everything your salary produces. She is polite enough not to say that you look wealthier than most approved applicants but own less than nearly all of them. You leave the bank carrying the same designer key fob that made the valet call you sir 20 minutes earlier. Across the street, Noah is standing outside a modest brick duplex wearing the same inexpensive shoes he has worn to work for 6 years. A real estate agent shakes Noah's hand and gives him the keys to both apartments. A man passing by looks at your car, looks at Noah, and asks whether the black sedan belongs to the new owner. Noah laughs and says the car is yours but the building is his. That is the moment you finally understand that you spent 8 years buying the appearance of the life Noah was quietly building. 8 years earlier, you and Noah started on the same Monday with the same job title and the same $56,000 salary. You arrived in a faded 9-year-old Honda while Noah arrived in a Corolla old enough to have a cassette slot. Neither of you felt poor because neither of you had seen what everyone else in the building was driving yet. At lunch, senior employees discussed watches, restaurants, neighborhoods, and cars as if those objects were evidence of professional competence. One manager told you that clients trusted people who looked like they already knew how to handle money. You did not hear vanity in that sentence because you heard strategy. Your first annual bonus was $4,000 before taxes and $2,700 after them. Noah transferred his bonus into a broad index fund before the money had spent one full day in checking. You bought a $2,800 watch using the bonus as a deposit and financed the rest over 12 months. The salesperson called it an investment in yourself, which sounded better than purchasing approval at 23% interest. People at work noticed the watch before they noticed the report you had stayed late to finish. 3 co-workers complimented it, 1 director asked about the model, and by Friday the monthly payment felt justified. No one complimented Noah for owning 31 additional shares of an index fund. That was the first time looking rich rewarded you faster than becoming wealthy. At 27, your salary rose to $72,000 and you increased your lifestyle before the first larger paycheck arrived. You moved into a glass apartment building where the lobby smelled expensive and the rent consumed 40% of your take-home pay. You leased a black European sedan because parking an old Honda beneath that building suddenly felt like admitting failure. The payment was $740, insurance was $260, and private parking added another $200 every month. The car cost more each month than the room you had rented when your career began. But the doorman greeted you by name, co-workers asked for rides, and strangers assumed you were doing better than you were. Attention arrived immediately while every financial consequence waited quietly for the end of the month. Noah still drove the old Corolla, shared a 2-bedroom apartment, and increased his automatic investment to $800 monthly. People at work began asking whether Noah was having financial problems because his life had not visibly improved. No one asked whether you were struggling because your struggle had leather seats and polished wheels. Your checking account rarely stayed above $1,000 for more than 3 days after payday. When groceries, dinners, and weekend trips exceeded the remaining money, credit cards quietly carried the difference. By 28, you owed $12,000 on 3 cards but still received offers for higher limits. You interpreted each higher limit as evidence the bank believed in you instead of evidence the bank understood you. Your mother called one afternoon because she needed $1,500 for dental work not covered by insurance. You told her you could help after payday even though the watch on your wrist had cost nearly twice that amount. The next evening, you spent $400 entertaining coworkers because saying you could not afford dinner felt more embarrassing than carrying the balance. Your first card declined, so you laughed, blamed the bank, and handed the waiter another one. No one at the table noticed what happened, but you noticed yourself becoming skilled at hiding financial panic. At home, you placed the watch, car key, wallet, and phone on the kitchen counter like evidence from a life you could not afford. Then morning came, and you put every piece back on because the performance had already become your identity. At 29, you received a promotion that raised your salary to $96,000 and made everyone say you had finally made it. Instead of using the raise to create space, you used it to upgrade the performance. The newer car came with a larger payment, the larger apartment came with higher rent, and the promotion came with more expensive expectations. Your salary had nearly doubled since your first day, but the amount left after each month had somehow become smaller. You began measuring affordability by whether a monthly payment fit rather than whether the object improved your life. Vacations were paid after you returned, furniture was financed after it stopped feeling new, and dinners remained on statements after everyone forgot them. You stopped opening statements completely because uncertainty felt less painful than confirmation. Noah received smaller promotions, kept the Corolla, and continued investing the difference between what he earned and what he displayed. When the company offered a first-time homebuyer seminar, Noah registered immediately, and you joked that property would tie him down. Noah asked what the car payment was tying you to, and neither of you laughed after that. You dismissed the question because people reject truths most aggressively when they already suspect the answer. 4 years later, the company introduced a mortgage partnership offering employees discounted fees and private appointments at a nearby bank. You registered because a man earning $96,000 and driving your car was supposed to qualify for a house. Noah registered because he had saved $64,000 and wanted a duplex whose second unit could reduce his mortgage. You entered the bank wearing the watch, carrying the premium card, and assuming appearance had already answered the important questions. The mortgage officer ignored all of it and asked for balances, obligations, assets, savings, and debt. The numbers showed $32,000 in revolving debt, $14,000 on a personal loan, and almost no emergency savings. Your income impressed people, but your obligations impressed the bank more. The officer said you might qualify after reducing debt, ending the lease, and building a real cash reserve. You asked how long that would take, and she said the answer depended on how much of your current life you were willing to stop financing. You walked outside expecting privacy and instead found Noah completing the purchase of the duplex across the street. Noah had earned less than you for most of the previous 8 years, but he had converted more of each paycheck into something he could keep. A stranger assumed the luxury car belonged to Noah because people still judged wealth using the evidence you had spent years manufacturing. When Noah said the car was yours but the building was his, the sentence separated appearance from ownership in 9 words. You had spent years making strangers believe you possessed wealth, while Noah had spent those years creating wealth strangers could not see. Inside your car, you opened the banking app and saw $187 beneath the dashboard, worth more than Noah's first down payment. For the first time, the leather seats did not feel luxurious because they felt like walls. That night, you placed every status symbol you owned across the kitchen counter and began calculating what each one had actually cost. The cars had consumed more than $58,000 in payments, insurance, parking, interest, and depreciation. The watch had cost nearly $4,000 after financing and could now be sold for less than half. The clothes, restaurants, upgraded apartments, and financed trips had purchased thousands of compliments that disappeared before the bills did. You calculated that appearing successful had cost enough to provide a house deposit almost twice Noah's size. You were not poor because you earned too little. You were poor because every increase in income had been assigned to proving you were not poor. The realization did not feel motivational because it felt like discovering you had spent 8 years outrunning a person who never existed. You were never trying to impress Noah, your co-workers, or strangers. You were trying to silence the part of yourself that felt behind. Selling the car was the first decision that looked like failure to everyone except the person making the payments. Because the loan exceeded the car's value, you paid $8,000 merely to stop owning it. You bought a 7-year-old Toyota in cash and felt more embarrassed than relieved during the first week. Co-workers asked whether something had happened, and you discovered how quickly people translate simplicity into trouble. You sold the watch, moved into a smaller apartment, and used the recovered money to attack the highest interest card. The first month without the luxury car felt quieter because nobody asked about your life anymore. The second month felt lighter because nothing expensive was waiting to be withdrawn from your account. You automated $1,200 monthly toward debt and savings before deciding what remained available to spend. For the first time, your lifestyle was required to survive on the money left after your future had been paid. Paying off the first credit card produced no public reaction, which made the accomplishment feel strangely pure. 1 year later, the revolving debt was gone and your emergency fund contained more money than your checking account had held in years. Noah never said he had warned you because people who are actually secure rarely need credit for being right. He only said that becoming invisible again would feel strange before it started feeling free. By 37, your savings and investments had reached $210,000, and almost nobody at work knew. You still drove the Toyota, still wore the simple silver watch, and still received concerned looks from people financing newer lives. This time, their assumptions did not hurt because you no longer needed strangers to misunderstand you correctly. You purchased a small 2-bedroom home with a fixed mortgage, a healthy down payment, and enough cash left to sleep peacefully. No one at the closing asked what car you drove because the documents already showed what you owned. Outside, another young man stepped from a luxury SUV and briefly looked at your Toyota with the same expression you once feared. You watched him enter the bank carrying a polished key fob and recognized the weight he was trying to make look effortless. For a moment, you considered telling him that the approval he was buying would disappear faster than the payments. You said nothing because some lessons cannot be transferred until the person is ready to stop performing. You unlocked the Toyota, placed the house key beside the simple car key, and understood the difference between access and ownership. The luxury car had once given you access to attention, but the ordinary car had carried you towards something that remained after people stopped looking. Looking rich had kept you poor because every purchase designed to prove success had quietly sold a piece of your future. The day you realized that was not the day you became wealthy, but it was the first day you stopped paying to appear wealthy. For 8 years, you bought proof that you were doing well. And then one ordinary duplex showed you what doing well actually looked like. It did not look like leather seats, designer watches, or strangers calling you sir. It looked like a quiet room, a paid-off card, money in the bank, and nothing expensive waiting to frighten you next month. You spent years trying to look like a man who had nothing to prove before finally becoming one. And the first thing real wealth bought you was permission to let everyone keep guessing wrong.